policy announcements, Lata, apart from the fact that the RBI will expand the functionality in RBI Retail Direct to allow investors to invest in T-bills via SIPs. Apart from that, as expected, RBI has also said it will shortly release, it hasn't given us the details, the new liquidity framework. The report has been received and it will now be published on the RBI website for comments. But other than that, yes, a surprising hawkish pause, not the dovish pause that the markets were factoring in, with repo rates being left at 5.5%.
No, actually, he's also given away the mystery of the report that will be released on liquidity. He has said that they have said the report is recommending that the weighted average call rate should be targeted by the MPC, by the Reserve Bank, to enforce the repo rate, which is what we are doing now. You know, the Reserve Bank targets the weighted average call rate. So actually status quo, even as far as the liquidity report is concerned, and that's not a surprise. That's what he told us in our interview, if you remember, that there is a lot of correlation between the call rate and the TREPS rate and market repo. But anyway, let's get to our experts. Kaushik is continued to stay with us. Kaushik, the 6.36, 6.37% 10-year bond yield is indicating that the market is reading it as no more cuts. What's your read?
So, Lata, we are not surprised with any of these announcements. These are in line with our baseline forecasts. Our GDP growth for this year was 6.5. I told you that RBI at this stage will not touch the GDP forecast. There's so much uncertainty. And we have not even seen the April-June GDP number, which comes out on 29th August. So I think RBI has done the right thing to hold on to the GDP forecast. And April-June of next year, they have shown 6.6, which is also pretty, kind of steady, given India's potential growth rate is around 6.5 to 7%. So, that's on growth. Now, obviously, going in the next few weeks or months, it could be reduced given the tariff threats, depending on where tariffs settle down. But on inflation, if you've seen April, June of next year, as you mentioned, it is looking like close to 5%. And that would be the forward-looking, view with which RBI will decide whether to, cut rates anymore or not. And what I saw this time, and you must have noticed that too in the statements, RBI spoke a lot about core inflation, and our governor kept on mentioning about core inflation remaining at 4.5 or 4% plus. So I think RBI is also going to, stress on core inflation as we move ahead and not just react on headline CPI. What will be more important is how does growth behave, and that number will get on 29th August. And by 1st October, we'll also get to know where this tariff thing is going. And if it is required, then RBI can squeeze in one more 25 basis points. But that will be hardly any joy for the market if that's the last rate cut.
Yeah, I agree with you. Actually, now I was just looking at the swap rate also, and that is indicating that the 6-month OIS has actually moved up 4 basis points. It was standing at 5.39. Now it's coming up to 5.43. So clearly they're removing expectations of rate cuts, or so it seems. But I don't have too many swap rates right now within the Reserve Bank. Mr. Ashwini Tiwari, the Managing Director of State Bank of India, is with us. Good morning, Mr. Tiwari. Thank you very much for your time. How are you reading the policy? Are you getting the sense that there won't be any more cuts? And what does it mean from a banking standpoint? Big relief?
Morning, Lata. So, as you are aware, our in-house economist, Dr. Ghosh, had a 25 basis point cut projected on certain grounds, and this has not materialized, largely as Kaushik said, because of the inflation forecast, which is going to be higher. Now, from a banking standpoint, any rate cuts in loans gets immediately priced, immediately transmitted, especially in the external benchmark linked loans. However, the deposits get priced with a lag. So in terms of pressure on the NIMs, I think this is a little bit of a relief. That the NIM pressure will kind of temper down a little faster than what we would have expected with a rate cut. So overall, I think this suits us for the time being.
Okay. Well, actually, the Nifty Bank is the only index that is in the green. The remaining two indexes, Sensex and Nifty, are slightly in the red, but not much. I mean, it's just 0.1, 0.2%. But importantly, the Nifty Bank is happy that the EBLR, the external benchmark lending rates, do not have to be brought down immediately, perhaps not at all in the current year. Upasana Bharadwaj of Kotak Mahindra Bank has also joined us, the economist from the bank. Upasana, your reading, were you expecting a rate cut? Have you removed that expectation now? Your takeaways?
Lata, you're right. We were earlier looking for a possibility of a rate cut. I mean, it was a very fine call, I would say, because, since the time this tariff-related uncertainties came about, we did assign a relatively lower probability. But having said that, yes, our base case was for, at least one more rate cut possibility for now. And that, with this current policy, I think the governor has clearly set the bar very high for the next rate cut. While, of course, the inflation projections have been revised down to 3.1, we do see a downside, but that's going to be again led by food prices. So we should not look into that too much, rather focus more on core inflation. As Kaushik said, I would agree, we need to focus more on core inflation. Now, we do see some reasonable downside risk to RBI's GDP estimates of 6.5% as we go into the year. But for that, we'll have to wait and watch. And only if RBI's own estimates on GDP see a significant downside risk is when we can expect some more last leg of monetary easing that could come about. But again, that's another 25 basis or so. But for now, I guess we will have to wait and watch. Having said that, just one more point is that, the possibility of additional rate cut, if at all, we only see October as the room for rate cuts, because beyond that, I would say the focus again is going to be shifting much more into the next year, wherein the inflation, already we are seeing 2 quarters of RBI's estimates as above 4%. And that is going to be subsequently seeing much more higher numbers, maybe higher than 5% as well, for at least the second quarter. So the chances of rate cut diminish even further, even beyond October. So if at all we see downside risks emanating to growth, we see October as live. Otherwise, I would say the bar is set very high for a rate cut.
Yes, I agree with you. If you are not able to cut rates when the 1 year forward, inflation is 4.4 or less than 5, it is even less likely that you are going to cut when your 1 year forward rate is 4.9 for inflation. So even October becomes a little dicey, and that's how the market is reading it. Or is it 6.38 now? Shobit Mehrotra of HDFC AMC, what is the bond market making? Did you look at the swap rates? What are they telling you?
Morning, Lata. I think bond markets going into the policy had this, minority view that maybe a surprise rate cut could come in today. And I guess the disappointment of not seeing that surprise rate cut coming through has led to the reaction in the market where, yields have gone higher. Now, in terms of policy, I think what I have found, interesting is one data point which, the governor spoke was 1 lakh increase in flow of resources on a base of 33.9 lakh. Net flow of resources increasing by just about 3% odd. That is banking and non-banking resources combined. I think that is indicating underlying trend growth quite weak. So, if you're going to see only about 3% increase in flow of resources in an economy of our size, which is below even nominal growth of the GDP, indicates underlying weak economy. And my view is that once RBI gets more data points confirming that growth is indeed on a weaker path, there would be room for considering some more easing. And perhaps October is the time when, that could be taken up. So in terms of, I think, immediate response, because...
So you are still keeping October alive. You are keeping your October hopes alive.
Absolutely. I think the data would force RBI. I think, the weaker growth numbers, once they are out, we see Fed moving in September, maybe with the first cut, would provide room for RBI to go ahead.
Yeah, it's possible. It's possible that there is, some announcement on tariff, and RBI works it into the forecasts and says that, okay, now another 0.3%, 0.25% hit is likely because of the tariffs, and change the forecast to justify a cut in October. But at the moment, your market is still calling 6.38, which means they are looking at it as a little harsh or a little hawkish. Mr. Tiwari, to come back to you, and thank you for your patience, thank you for waiting on. You'll have a cost coming up, renewing the KYC, refreshing. You expect to open camps. Will all this mean a cost, or is it too marginal to impact your margins?
No, it's not that much of a cost. Actually, the camps is being organized by all banks for not only, as Governor explained, for the re-KYC, which is the major thing, but also for financial literacy, for also enrolling people into various micro insurance schemes, etc. So it's a multi-purpose camp. And actually, to me, the major purpose of this kind of a camp is to spread more awareness about re-KYC. So we have activated our the business correspondent networks, the CSP points as they are called. And they are the ones who are largely involved alongside our branches. So we see that post these camps also, the campaign in terms of re-KYC, etc. will continue. As you may remember, we have time till June next year, even for those completed 10 years, to complete this. And this has to be done, because otherwise, till how long will RBI give us time? So I think it's time that we complete this work. And this is all going to help. So not in terms of cost, I don't think it's a significant number.
But Mr. Tiwari, the other cost, let me come back to lending rates. Banks, of course, happy that there's no RBI rate cut right now in this policy. It may come later. Is the deposit repricing complete, say, for State Bank of India? What kind of cushion will this give you for the next few months or so until we see the next rate action from the Reserve Bank of India?
So as we explained, the lending rate cut, broadly, the transmission is completed. Some part might be left because the MCLR gets repriced only after the deposit costs have come down to allow that. But deposit cost actually has to be a function of the demand, also the competing rates of small savings and other system rates, where we are now at a slight disadvantage. So it's not a given that we will cut deposit rates equally to whatever the lending rates are. We need to get deposits at so that the funding support continues. Therefore, this is a dynamic thing. We continue to review this in our asset liability committees and take calls as necessary, and we'll continue to review it going forward. We cannot say that it's completed or not completed at this point.
Okay, sir, just to continue with what Ritu is asking you, therefore, this quarter, how much can margins fall? Will Q2 be the bottom?
So there will be some moderation. I really can't say where this will land, because in 2 days' time we have a result, so we will know for sure for Q1 numbers. And going forward, the pressure does remain, but where it will land, I can't disclose at this time.
Oh, okay. Well, at the moment, the banks also have started losing a little bit of steam, and the market has taken a slightly negative tilt after the policy announcement. It's 1/3% lower as far as the Nifty is concerned. Sensex also down about 1/4%. Nifty Bank has lost 0.1%. So clearly, the disappointment is showing, I would say, Ritu.
Yeah, this keeps showing, Lata, and once you go into the press conference, if they hear something positive, it will go up again. By the way, I just saw SBI showing green, so good sign for us.
Well, we're all waiting for your numbers, sir, on Friday. But Kaushik, very quickly, with the first quarter next year inflation forecast already touching almost 5% and expected to go up from there on, when do you expect this next rate cut, and what is your own sense of the terminal rates in this cycle?
So Ritu, as Governor had mentioned in a recent interview with CNBC itself, that the bar for cutting rates is high going forward, because you're supposed to be forward looking, and 6 months, 12 months down the line, if you have inflation at 4.5%, 5%, then you have to be kind of prudent to decide how much you should be cutting now, so that we know that once RBI finishes its rate cutting cycle, say this year, for 15 months they will not hike rates, even if they're neutral. So the rate hikes will only happen in April, June of 2027. That's the earliest that I see rate hikes happening. So if you have to hold rates for this longer time, it is better to not cut to the bone and then not having to reverse it much more quickly, rather than going down and then market pressurizing you to reverse it very quickly, and that can have a lot of volatility. The broader point that I would like to make is what is happening with this tariff threat and negotiations that are ongoing. This is not going to get solved by monetary policy alone. It's not like you cut 50 basis points and all your problems will go away. This requires more of a fiscal kind of a support. And, the government will have to step in. We are hearing, kind of news reports that there are some schemes to help the exporters. Negotiations are happening. So we should not expect the RBI to just bear the burden for growth. They have done enough. They've done 100 basis points. Probably they sneak in one more 25 basis points, but that's it. Beyond that, if the tariff situation worsens, this requires more of a discussion on the fiscal policy side. So now I think the fiscal policy has to step in. The other bigger point that you should remember is that household savings have come down, particularly financial savings. If you keep on cutting rates, we are just thinking about the loan growth side. What about the depositors? I mean, why would I have incentive to put money in the banks if your deposit rates are coming down lower and lower? So you have to think about the fixed income earners, pensioners. That's also a big stakeholder for the economy. So I think beyond what RBI has done, maybe one more 25, maybe October, because that's when RBI gets all the information about tariffs, growth. As Shobit mentioned, maybe a Fed rate cut in September. And, they probably can, do one more 25. But beyond that, as you head more towards December and then February of next year, you look at inflation at 5% growth. I'm not that negative on growth. I think growth, you'll get 6.5% this year and next year as well. So beyond that, maybe monetary policy just needs to stay where it is for a longish period of time with surplus liquidity. And now the fiscal engine has to step in to support growth from the next budget or, in the next few months if they have some money to support the exporters.
Okay, Mr. Ashwini Tiwari, the new liquidity management framework, that RBI will announce, later. Quickly, what are your expectations and what will be the impact for banks like you?
So we haven't seen the full report as the governor mentioned will be published, but he did mention 2 or 3 things which will continue as before. So therefore, to me, it may not have too much of an impact, simply because the liquidity is surplus as we speak, and more importantly, the CRR cut, which is going to be happening shortly, will lend further liquidity. So I don't think too much of an impact on us. The liquidity is comfortable for banks.
Mr. Tiwari, I just wanted to ask you about credit growth. I know you can't tell me anything immediate since your results are due, but your old guidance was, I think, 12 to 13% for the current year. Is there so much demand for credit?
So the credit for the large corporates that the governor also mentioned, it's not only bank credit. They have internal surpluses and cash. They also are accessing the CP market, the other market instruments. Some of them have raised equity also. So a lot of non-bank sources also. What we are seeing actually is some of the projects are moving ahead. But overall, if you ask me, the demand from large corporates is surely weak at this point of time from the bank side.
Okay. So if you don't mind, before I let you go, can we have a rapid fire of whether you all are expecting one more cut and when? Mr. Tiwari, expecting a cut?
I'm not expecting this year.
Not expecting a cut. Okay. Shobit?
Yeah, as I mentioned, at one last cut, maybe 25 basis points in October.
1 October. Kaushik?
So as of now, we don't have any more rate cuts, but I have to read between the lines. The devil could be in the details. Let you know later.
All right. No, anyway, 0. Okay, you are with Ashwini. You are with Mr. Tiwari. Upasana?
I'm not entirely ruling out, but for the time being, I guess I would say a pause.
Pause for now. That is, the last cut is behind us. Okay, so 3:1, the panel, the CNBC panel expects no more cuts. The terminal rate is 5.5. Only for the economists, a couple of quick questions. What is your growth forecast for the current year? Upasana, the governor says 6.5. You say?
6.2. 6.2%.
Fair enough. Kaushik?
6.5% this year as well as next year, FY27.
Oh, all right, fine. And finally, inflation. Governor says 3.1. Upasna?
2.6%.
2.6. Okay, so that gives the governor some space in October. Kaushik, inflation forecast?
We are at 3% this year, but next year we are at 4.5%, with April, June being at 5.2.
Okay. Yeah, no, the governor is also, I guess, Upasana, the more you bring the yields, the inflation forecast down for the current year, the more likelihood of next year being a 5% or definitely above a 4.5% in terms of inflation. It's really the base effect, and as the governor says, we will have to look at core, and maybe in the policy, he will say we have to look at 2-year averages hereafter because the base is distorting things a bit too much. Ritu, any more in terms of rapid fire?
Well, yes, I quickly wanted to ask everyone, what sort of clarity at this point do you need from the Reserve Bank of India governor? We're going to be hearing from them in the press conference. What are some of the words or forward-looking guidance that you'll be watching out for or would want clarity on? Kaushik, starting with you.
Yeah, I mean, that's up to you to get more answers from the governor. I wish I could be there at the press conference. But yeah, I mean, people would like to know their assessment about tariff, because that's not something which he has spoken about clearly. So what is the kind of, band of, growth risks that he is keeping in mind on the tariff?
Yeah.
And, therefore, whether his decision will change, is it a monetary policy solution? Is it a fiscal policy solution? And again, getting back to that real interest rate, a discussion, what is the adequate real interest rate in this kind of growth inflation mix, which can give you some idea how much space is there for RBI to cut rates.
All right. Upasna, what will you be watching out for?
Yes, one, definitely on the tariff front, what is the downside risk that they do foresee based on whatever uncertainty is prevailing? And secondly, I would also want to get some more clarity, which the governor did mention about, of course, was with respect to the WACR being closer to the repo rate. At the moment still, because liquidity is ample, we are still seeing it more closer to the SDF rate. So what will be, what is their level of comfort? Are they still okay with SDF, or they are going to ensure that repo rate, WACR will start trading towards the repo rate?
All right. And Shobhit, what sort of clarity would markets want from here on the next steps from RBI?
I think monetary policy transmission is getting disrupted by longer and bond yields rising. So I don't know how much RBI is concerned and watching the movement of bond yields, despite, rate cuts happening, liquidity being provided. Longer and bond yields have been reacting higher. So how does that disrupt the transmission, and what could RBI do about it?
Right. Hearing from the Reserve Bank of India governor, in an hour or more from now. So we'll hopefully see some of those questions addressed. But Lata, any final thoughts?
No, I think the questions they've asked, if I get a chance, would be my question, Kaushik. It would be, what is in their model, where do the tariffs figure? And if it, turned out to be worse than they assumed now, whether that opens up space for a rate cut would be, of course, paramount questions. The WACR, yeah, if I get a second question chance, which they don't normally give you, you have to ask when do you see the call rate aligning with the repo rate? But at the moment, call rate is at 5.4, 5.39. We are not very far away from 5.5 anyway. So I would, if I get, my first chance would be on what the governor thinks about growth. As well, this yield transmission. I agree with Shobhit's point that yield transmission is kind of a door that has been shut. In fact, some people even pulled off their bond raising plans after the last policy, and after the current one, I guess even more. The people who are raising money, especially NBFCs who are raising money from the bond markets, are going to find it more expensive. So that is not exactly what transmission means. Transmission means it has to be lower, and that's not happening. Exactly the opposite is happening. Whether the Reserve Bank is concerned about it is certainly a question which, if I don't get a chance, somebody else will ask. We will see how that goes. But this will go as a hawkish policy. If Mr. Tiwari is still there, sir, would you want to ask the governor anything? Okay, Mr. Tiwari is not there, but I really want to know what the governor, what bankers would want to know from the Reserve Bank. The Reserve Bank actually has given a very clean chit for banks. If you looked at the liquidity ratios, 132%. If you looked at the credit deposit, 78%, they said. All within the comfort zone of the Reserve Bank, GNPAs 2% and NPAs 0.5, 0.6%. Clearly, it's a Reserve Bank that is very happy with the state of the banking system. So that's kind of a clean chit which the market should take home. Very positive statement coming from the regulator in terms of its assessment of the banking system. A reasonably optimistic picture coming from the monetary authority in terms of the growth. The market should take home all that as positive, but what they have taken home at this point in time is, of course, the absence of a rate cut. Over to you, Ritu. I think we have to call it a day on the first session of coverage of the monetary policy. Thank you to Mr. Tiwari, Shobhit Mehrotra, Upasana and Kaushik. Over to you, Ritu. You were going to say something.
No, with that, I think we will wrap up our coverage. It's been, a pause from the Reserve Bank of India this time around. Just to briefly recap for our viewers, repo rate unchanged at 5.5%. The decision was fully unanimous by all members of the MPC. The stance has been retained at neutral. Again, a unanimous decision from the MPC. On the inflation front, as widely expected, RBI has lowered the forecast from 3.7% on average for this year to 3.1%. And importantly, they've given us a new number for the first quarter of the next financial year, Q1 FY27. That is at 4.9%, and that is where market is taking its cues. That perhaps, that easing cycle maybe, this pause could be a little longer than expected, and, that cut may come only later. The GDP growth numbers, again, for this year, completely unchanged for all the quarters for the full year at 6.5%. And the new number for Q1 of the next financial year, that is at 6.6%. In terms of non-policy announcements, for a change, not much this time around. But yes, the new liquidity management framework, that is something that the Reserve Bank of India will be announcing shortly. The governor gave us a cue that the weighted average call rate was found to be effective in transmitting signals to other money market instruments. That is something that the group has recommended, and the RBI will now be seeking public feedback on this document before a final view is taken. On that note, we're going to wrap up this special RBI monetary policy discussion from Lata and me. It's a goodbye and thank you for watching. But stay with us. More news and updates will continue after this break.